Welcome to Financial Investing Radio, where you'll learn the secrets for consistent, high-probability returns in the financial markets for additional income to change your life. Grant creates consistent, high-probability trading systems for the financial markets and has applied them over the past 5 years. He's only recently started sharing these tried and true market secrets. As a gift to listeners, Grant is offering his high-probability indicators for free. Go to financialinvestingradio.com and download yours today. Now, here's your host and trading veteran, Grant Larson.
Okay, hey everybody, this is Grant. I am very excited today because I have one of my mentors with me today. His name is Anthony Drager. Now, I met Anthony almost 4 years ago. Hard to believe it was that long ago. But I have to tell you that I was really impressed at the beginning with his ability to read current market conditions, like things that are happening right now. He's got this ability to understand the flow of orders that are going through. He can see what side is winning and where the high probability location is to get in and trade. He is a super strong, disciplined trader. So Anthony runs a trading group still today. And I reached out to Anthony recently and begged him to come join me today, and he's been very gracious in doing that. So thanks again, Anthony, for your time. I appreciate that.
My pleasure, Grant. Good to be here.
Hey, so I got some questions for you. So if it's okay, I'm going to start going through some of those. Is that all right?
Absolutely. Go ahead.
Okay, so as part of introducing yourself, I wanted to know if you would talk about how you got started trading.
I'll shorten up the long story of it because I think, in fact, I was telling this to some people today, everybody has a story, but they don't often think about it, and everyone should. Like, how did you get to this point? Even if you haven't been successful yet, you should document how you got to that point. So I had to do it because of a ebook that I was writing, and it was fascinating because I got interested in financial investing when I was probably 12 or 13 in the mid-'80s because my dad owned a few stocks when nobody knew what the stock market was back then. And we used to watch the Business Channel as we're eating dinner, and he used to watch where his stocks closed and things like that. Well, there was something that came up on Coca-Cola. And I said, Dad, why wouldn't you buy Coca-Cola? Are you crazy? It's Coca-Cola. And he says, no, it's not that easy. So I took a piece of paper, Grant, and I started plotting, looking at the Sunday paper, and I plotted where Coca-Cola closed each week. And after I got a few months, what I was doing is making a chart and not realizing it. And I'd hide it under the couch, and I pulled it out after a few months. And I remember the numbers almost exactly. It was $40 a share, went to 35 and then to 42. So I waited till it went to 42, and I said, hey, Dad, look, you would have bought it at 40 and sold it at 42. What's the matter with you? And he says, yeah, but it went to 35 first. He says, what would you have done then? I says, well, that's where I probably would have bought it. And he laughed and he said, well, now you know it's not that easy. But he knew at that point, Grant, him and my mom knew I took an interest in this is something you could do. Well, it worked out that their friends had a son who traded at the Chicago Mercantile Exchange, the CME. And this is in the late 80s, early 90s, right? Everything's in the pit. There's no talk of computers at all. So I get a summer job in 1991 on the floor in the meats. Meat futures, right? Cattle, live cattle, hogs, feeder cattle. And so after the first week, I don't know, have you ever been to the trading floor at all?
I've not. I used to walk by it every day when I worked in downtown Chicago, and that's part of my backstory. I used to think, what are they doing in there? Anyway, I won't go to that, but yeah, keep going.
No, so it's like if you've been there after a first week, you're intimidated, right? Because of all of what's going on and it's chaos and everything else. But after that first week, when you get over that hump, it's like, this is what I'm doing for a living. I'm a 17-year-old kid at the time in between junior and senior high school, and I'm like, this is what I have to do. So I go back to high school, I graduate, and the next day I call the guy, and his name was Sam. I remember this yesterday. I said, Sam, this is Anthony from last year. He ran the phone desk. And he says, nah, he kind of blew me off. Well, we don't have anything. Give me a call in a month. So I was kind of disappointed. I didn't pursue it. My brother is an electrical contractor. I worked for him as an electrician, as an apprentice. I went to school in the fall at night and worked during the day. So 4 years go by. I'm done with college, and I'm talking to my other brother. And he says to me, what what are you going to trade? He said, I said, I'm just going to be an electrician. I said, our brothers have done good at it. My dad was good at it, made a good living. He says, throw those tools in the lake. And he said a few swear words in between. He said, if you want to go down and trade, he said, you'll regret never trying it a lot more than you'll regret trying it and failing. And I thought, wow, that made a lot of sense. And I don't think he realized how pivotal that was, because from that moment on, I then pursued getting a hold of my parents' friend's son, became friends with him, and just to get an opportunity, he ends up being a dear friend of mine to this day, and I kid with him. I said, I just became friends with you because I wanted a job back down on the floor. So he gets me back down on the floor in 96. I become an ARB clerk. It's a thankless job. You can make good money, but it's not the job you want. You want to trade. So I become a member of the Board of Trade in 1999. Dow Futures was the pit I was trading in. I'm ready to make my $1 million. Only one problem. I couldn't raise. I wasn't undercapitalized, but I was fearful. I could not raise my hand. And as an open outcry, that's what you do to trade, right? Bid and offer. I couldn't do it. I would make one trade a day throughout the whole day. Stand there and make one trade a day. And a mentor that I had, because I went through education too, and people that say, well, it's hard to invest in education, you don't know what's out there. They're right. There is a lot of crap out there. But you got to hope someone's teaching the right things, or how are you going to learn it? So I paid a lot of money back in the late 90s, and it was the right way to learn to trade, how to be a pit trader. So the guy that taught those classes told me, he says, you got to review your trades. And I used to think, well, it takes me about 20 seconds to review my trades. Grant, I make one a day. I bought it there, I sold it there, good trade or bad trade. So I giggled about that. I was about done, right? It was about 8 months. I wasn't making money or losing money. I just was breaking even, not trading much. So I was ready to quit, and I find, it's another long story, I won't get into that, but a risk manager at a prop firm. So most people, even today, Grant, don't know what a prop firm is. I didn't know what it was in 1999, 2000, and yet I'm meeting a guy who's a risk manager at one. And there at noon, he's telling me the business model. And for people listening to this podcast, it's simply, because they still exist today, it's simply a real company, usually brick and mortar company, that fund your account. If you lose money, it's their money. They're not going to let you go on forever, but they give you a long leash. If you make money, it's a 3-year contract, typically at 50-50. And that was their deal. They give you a workstation, computer, but most importantly, they give you community. You're around other traders, right? So it's like noon, and I say that because I look around the office, and there's nobody there. It's 12 in the afternoon. I said, where's everyone? He says, well, we trade the second half of the European day. Eurex was the only electronic game in town back then. These guys were done at 10:30, 11 o'clock in the morning, Central Time. They'd start about 6 or 7. And I'm like, wow. So I tell this story because I remember, like it was yesterday, I go back home. He says, come back next week, meet the owner. He says, it could be a job interview. I said, great. I tell my dad and mom about it. My dad says, well, when you go back there, go there before 10:30 and look at the cars in the parking lot. And if the cars are nice and you get the job, take it, because they're making money, or they wouldn't be having nice cars in the parking lot. So I get there for 10:30. There were nice cars in the lot. The owner interviews me, and he says, one last question. What makes you think you're going to do this? So anyone that I interact with now, Grant, I always say that. What makes you think you're going to do this? Because my answer was, and I'll be honest, I made it up. I just guessed. I said, well, because I'm putting myself around guys doing it. And it happened to be the right answer. He said, that's what I'm looking for. He says, if you want the job, you got it. He says, not only will you give yourself the best chance by putting yourself around people doing it, but also people trying to do it. So what a lot of people do is they only put themselves around people doing it, and sometimes you're always reaching. You know what I mean? You want what those people have. But if you do both, put yourself around people doing it and around people trying to do it, you have that support. You know what I mean? And that kind of graduation type of dynamic where you're going through. You're a freshman with other freshmen, sophomore, and you move up instead of always looking at seniors. So that was, I remember that question because it's what got me hired. And that was April of 2000, and I went from making no money as a pit trader to making more money in my first 6 months than my dad had made in like 1 or 2 years. And I remember it because I was still living at home. He says, what the hell are you guys doing over there? He says, do they need any electricians? So that was it. That's my story. I was off to the races in 2000 when I got that job in April.
So that's amazing. How long were you with the prop firm?
From 2000 to 2007, about 8 years.
About 8 years. And so what was the drastic difference between your experience in the pit and in the prop firm? I mean, what was the key to, was it being around the others, or were there other elements?
Well, in my defense, the pit was illiquid I was in, meaning when I say illiquid, there wasn't a lot of paper or outside orders that came in, and that makes it, for anybody that knows anything about a trading floor, you need a lot of liquidity and outside inventory that comes in and gets filled by the brokers for the pit traders to have an edge. And if there's not, I tell it like this, it's like there's a lot of pigeons and not a lot of breadcrumbs. That was the pit I was in. So in my defense, it wasn't a great pit, and then being a new trader, it was even tougher. So the difference, number one, was not having the fear of other people looking at what you were doing. You know, when you raise your hand, you're a buyer. When you raise it to outwardly, you're a seller. And when you're new, you're not confident. It's hard to do that. But when you're on a computer, there's some ambiguity there, number one. Number two, there was liquidity. The markets in Eurex, which is a German exchange and still is, they pioneered trading on a computer, really pushed the U.S. exchanges to do it. But they were first. They had very liquid markets, the Bund, the Babel, the Schatz, which are treasury instruments in Europe, the Euro stocks and DAX, which are like the ES and NASDAQ here in the U.S., only they're European stock indexes. Very liquid markets, and then being around guys every day. We'd have short meetings every day, impromptu meetings. At the lunch table, you always went over what the hell just happened in that day, what was working for a guy who was doing well. We had a thing, and I don't mean to go on and on with these answers, Grant, but we had a thing called the God's Eye. God's Eye was two monitors in the middle of the room that showed your position or your P&L, and if you had an open position. So you would check to see if you were, make sure you didn't have a position. They had a risk manager that always did that too, but also to see if your P&L was right. But the real reason why I think the owner did it was so people had a sense of what other people were doing and making. So not looking over their shoulder, but seeing it in some central location to push yourself or to go and ask that guy questions. Hey, what are you doing? You're having 300-400 tick days, which is $3,000-4,000, not $100. It was $10 a tick usually were most of the Eurex markets. If you make 300-400 ticks, that's $3 or $4 grand. If a guy is making 1,000 ticks or 2,000 ticks, there were many days like that among traders. You'd know that and go to those people. So it made it really a strong community because, believe it or not, people who do well, we want to share. There's no real secret to trading, but there is a right and wrong way to trade. And so that's the difference between the education that might be out there where you get a lot of people who never could do it, so I have to teach it, and the people who have done it and do it, and they're willing to share because it really is, it fills out their circle, right? I become a better trader by helping others, by teaching your learning. So, but that was a big difference, not only the main differences, but a big difference between the pit being alone and illiquid and being in a prop firm where it was robust with not just liquidity, but community and success. And I knew how to trade, I just didn't have the right environment to trade and implement that skill. That's why I kind of got off to the races quick once I was in the prop environment. Generally, if this is a question you're thinking of, and a lot of people might, when guys were hired in groups of like 6 or 8 and they had no trading experience, it took them about 6 to 8 months before they wanted to see them turn the corner. And that's generally, how much leash that they gave you. So it was a great environment. I couldn't have done it without it.
During that 6 to 8 month period of time for the new guys, was it virtual or paper trading, or were they actually trading real money?
Real money. I don't remember ever trading demo. I remember they restrict your size to a 1 lot right away, and then you go to the risk manager after you got a good week or so, and it wasn't really hard and fast. You'd look at your performance and say, okay, let's go up to 4 lots. Let's go to 5. Let's go to 6. Let's go to 10, and all the way up. And you would sign a little piece of paper that, and then the IT guy would make sure your platform was set never to let you go over your allotted size. But I remember the first day I started, the guy, his name was Ed, he sat me down, he said, if you see something, trade it. That was my first instructions. And I mean, he showed me the functionality. Here's how you bid, here's how you offer, here's how market orders work, here's your P&L, here's your open positions. But if you see something, trade it. And it was live, right? Wow. And so I can't remember the newer guys. If it was demo, Grant, it wasn't for very long because they wanted people to do their learning in the classroom and in the meetings. They wanted them to start feeling what risk was. And it's hard if you train yourself too long in a sim or demo environment.
That's incredible. So if you see something, trade it. I like that. The other thing that's critical to what you brought out, and I think you really emphasized a lot, was the power of community. You know, having others around you to, you know, help share the ideas and the lessons learned. That's a huge impact on you, wasn't it?
It's all the difference in the world. I wouldn't be here talking to you. I'd be an electrician, and I'd have been a successful electrician, but I wouldn't nearly have made the financial success and freedom as a trader. But I would be. That's where I was going. And if I was going to quit in the pit when I was quitting, that's what I was going back to do until I found out about this opportunity in an electronic prop firm. But all the difference in the world. That's why when I see a lot of guys in let's call it the retail side of things that find out you could do this and find out you could open a brokerage account and trade these things called futures, and you could trade stocks or currency futures or even Forex or individual stocks, access is at your fingertips. They really don't have a chance unless they find the right community, the right group. And I don't mean a Skype chat. It's got to be kind of organized, because it's like this. Just because you live in a community doesn't make it a great community, right? If you got to lock your door every time you leave your house, it's not a great community. But there is a sense of, if it's a good community, now you're giving yourself the best chance to do this, because on your own, alone, have guys done it on their own alone? Yeah, but it's very anecdotal. It's like strike two right away when you try to do it by yourself, because your mind is your worst enemy. We're not wired mentally to do this successfully. Our mind is wired to protect us from being wrong. Well, you're supposed to be wrong in trading, and that's where risk management comes in. Our mind is wired to not only resist that, but put you on a leash and make you think good things that really aren't real. And you need sometimes a wake-up call for someone to call you a bad name and say, you suck today. You know what I mean? What are you looking at? Everybody in this room, I'll tell you a story. In one of our review sessions, we do it every day, just the equity futures traders. There's like 10 or 12 of us. We go around a table. We had our sheets in front of us, and we would only talk about, for 5 minutes each guy, the runs that we had, either the 3 or 4 winning trades in a row, winners or losers. And we talk about how we did. There were days that everybody around the table was up and up big. Everybody was green. 1,000, 2,000, 5,000, 800. We're all up big except one guy. And it was remarkable how much he defended his decisions. And it was just his mind trying to make him feel good. He was the only guy that didn't make money, and he lost a lot, and yet he was defending what he did. And I never forgot that, and I learned a lot from it, because that's your worst enemy. And usually that happens if you isolate yourself too much like he did, or you never give yourself a chance to get that feedback from other people who are good people. And there's not a lot of normal people out there that are willing to help. But that's why, we can get in this later, but that's why I tried to create a virtual proprietary firm, which I'm not the only guy teaching you. I want to be one of the guys helping you, but I want to introduce you to other people. And that collaboration is what's going to give you your best chance. I don't think learning from one guy it's really difficult for you to then just be off to the races. You got to learn from many people, just not too many, and then the right people. And there's the trick. There's the difference.
Yeah, that's incredible. So the power of community, the power of having the right people around you. If you were to step back and describe at a certain level your trading strategy at a high level, what is that? What does your trading strategy look like?
I like to catch transitions of when markets turn, whether that at times is fading a market, but that's not always trying to buy lows or sell highs. But when the market changes, it's mine. I've always done a better job describing the market and what I'm trying to do as I go along and do it. That's why people need to sit back and describe their story, and then sit back and describe their strategy to other people. Get better at describing it, you'll get better at executing it. So I like, the market is what's got an opinion. The market has a bias, not Anthony, not Grant. The market does. So the market's going to be bullish, and then sometimes it changes its mind and wants to be bearish. Well, where does that happen? How can I recognize that transition ASAP? So number one, if the market has transitioned to the downside, Grant, if I'm going to buy it, at least I know I'm fading it. So I keep a very short leash on those trades because I know I'm fading a market that's weak because I'm good at knowing where the turns are. If not, and I'm trading better, I'm going to look at selling retracements off that transition. Let me make it simple from like the lows, because there might be people who just trade stocks and don't know much about getting short. So just from the long side, if a market is bearish and it's going down, and there's a moment that I could determine it turns through intermarket relationships and order flow and just the pattern of a rejection, and I see a transition before most of the rest of the world, that it went from bearish to bullish, then I look to only play it from the long side. So in the grand scheme, I'm fading it, but in the shorter term, I've seen a transition. I'm playing it from the side of the team that's in the driver's seat, the bulls, and not necessarily just buying it, but looking for little pullbacks or retracements back down to small real-time support areas, and then I manage the trade. And so that's what I'm looking to do. Transitions and knowing if I'm fading it, always looking for intermarket relationships to tell me what the story is, and then also making sure that if there's an event, I trade that too. So people have to have this in their toolbox. You don't have to trade like me, and you shouldn't. I shouldn't trade like you. Nobody should trade exactly like somebody else. But there should be a common denominator of the way we think. If you're trading successfully, there's a common denominator of the way successful traders think. For instance, crude oil, I think it was yesterday, had a big move off an inventory number. And it was the best buying moment in the E-minis stock index because often it's influenced by a big move in oil, because oil affects the energy sector, which affects, obviously, the overall index. So the ES rallies. That was the best opportunity. Well, that necessarily didn't fit into an exact setup I just described you, but it did fit into a cause and effect setup. That rallied, I'm getting long. If it doesn't work, I know what to do. If it does work, I got a head start and I manage it. You see, and a lot of people don't play that. You don't have to be super fast. You just have to know that cause and effect. You have to know that relationship so you're not blindsided. Well, why did it go up? If you have to ask why it went up, you obviously missed something. So minimize what you missed. You're not going to catch everything, but minimize what you missed. So those would be the two techniques that I trade, is transitions soon after the transition before most of the rest of the world recognized it, and then any kind of economic events or intermarket relationships where an influential market makes a big move and I could catch something in my primary market.
That is definitely one of your strengths. I used to really, well, still do, really admire your ability to look at both correlated, meaning directly, as well as inversely correlated markets and understand the impact on the thing that you're trading, whatever the instrument is that you happen to be trading with that. And I think that's one of the innate pieces that you've developed over the years, is the ability to do that.
And I didn't invent it. I didn't invent intermarket relations. It's what I was taught from even in my pit days, let alone the prop days. And so what is fascinating to me, and it floors me from time to time, is most people will never, ever get around to that. As obvious as it seems, they'll go over it 99 out of 100 times. That's why most people will always not be successful. They'll never find the right way. I could become the most popular guy in the world, and it doesn't matter because people don't want to do what's obvious. They want to make it their own. They want to be complex. But if you think about it, the analogy is, you go buy a car, is that the only dealership you go to? No, you shop it around. You buy a plane ticket. There's websites that compare and contrast airlines so you know what's cheap and what's not. Well, why the hell wouldn't you do it when you trade the price of a stock index or oil or a currency? They have a price. They have buyers and sellers, so you should shop it around. And that doesn't mean that every uptick in one market you buy or sell your market, but what it does mean is you now understand the story because it's being read to you. Instead of trying to make all these lines on your chart, all these technical indicators, all these arrows to make it easy for you, the easiest trade are the ones you understand that are most simple. That rallied, this should. If it's not rallying, why isn't it rallying? It's probably weak. Okay, let me think of getting short. That's simple, but yet probable, because that's how price works. It relates to something else, or else how are we going to know if it's strong or weak? You got to compare and contrast. People do it as consumers. You got to do it as a trader. The one short story I'll tell you is one guy who has been with me a long time now, 2 or 3 years. He was on the phone with me, and he's like, I was telling him same thing I told you with these relationships, and he says, I didn't believe you. He says, until I went home and I looked at the charts, I'm like, man, that guy's onto something. And you know what he did for a living? He was an appraiser. That's all they do is compare and contrast. And he's like, I can't believe as an appraiser I didn't put 2 and 2 together and come up with that. So that's how elusive that concept is.
That's powerful. It is, and it has had a direct impact on the way I trade. Since going through the mentoring with you, there's multiple things that you've influenced me. One was the related markets, to the point that as I chart things today, still I have the correlated markets up, and what are those doing, and how is price reacting or responding to that? That's extremely powerful. It is the foundation of the way that I trade. The other thing that I'll mention is I remember you used to talk about, and I know you still do, about you'd have a picture, and the picture was a crowded room. You know where I'm going, right?
Yes.
And and everyone's in there. You're in a crowded room, and pick it up from there. Just finish the rest of the thought.
Well, and there's a lot of analogies and stories I come up with because it's the best way to convey a point, and it's every time you look at a chart or look at a price ladder, there's people who are long and short. It might not be you, but there's always opened position, both long and short. Well, the only thing that moves a market isn't people entering a position. It's generally people exiting a position. And if you get a moment where a lot of people got to exit a position, that's when you go up or down fast. That's when you truly have a move. So, for instance, if a lot of people are long, what do they have to do to get out? They have to sell it. They hope to sell it higher, but they still have to sell it. It's the quote is, after you buy it, you're a seller. Meaning after you buy it to get long, you have to sell it to get out. Well, if you're long and you're a seller, and I'm long and I'm a seller, and the damn market ain't going up, and it's getting crowded, there's a lot of sellers that become people exiting or exiting that trade. So if you think of a crowded theater, a crowded room, if there's a lot of people in there and everybody there is long, what happens when someone yells fire? There's chaos. That's when you're going to get the most action. So I just make sure if I'm in a crowded trade, I'm standing by the exit. So maybe I yell fire and I just jump out of the room, but I know where I'm getting out, and I can generally get out without getting trampled. But if you look at the market and a trade that way, you'll understand the dynamics of why markets move. If you don't know why, forget about the how, it won't matter. You have to know why. And that's one reason why markets move, because people have to get out of an open position. They don't have to get in a position. I don't have to get long, but at some point I have to get out of a long if I'm already long. So that's where the emotion is, especially when you got the longs on the run, you got weakness. And what makes price go down? Not only people exiting and selling, but people trying to sell and they can't get filled. And think about it. Whenever you're stuck in a trade, you try to offer it, damn it, I didn't get it. And then you offer it lower, you don't get it. Well, if too many people are doing it, that's the reason why the market's going down. They're not getting filled.
Right.
You know, same thing on the upside. Too many people short, they have to buy it. They all try to buy it at the same time, wham, they're all chasing it. And up they go. And so you've got to look at crowded trades. It's crowded theaters. When it gets too crowded, everybody's waiting and looking at each other, and as soon as someone hits an exit, a couple more, and the next thing you know, you can't get everybody out the door, and there's chaos. That's when a market moves up or down quick. It's the exodus of too many longs or too many shorts.
It's amazing the power of that metaphor. That has stuck with me for years. And that picture, when you first explained it, about 4 years ago, I went, yeah, I'd never thought about the other side. So many times you just think about getting in, right? You think about just that part of it, and you don't really examine the other side of it, right? Oh, I bought, now I'm actually a seller, right? No, you tend to think more of it, I'm a buyer. Well, no, I already was a buyer, I already bought. Now I'm actually a seller.
Right.
And that's a critical mentality.
In one of my meetings of the course that I do, it's titled what you just said, the other side. And quit thinking about what you're doing and think about what others have done and what they're going to do. Everybody's worried about where they're going to buy, where they're going to sell, where's my stop, where's this. Well, forget about that a second. Let's just look at the market as other people doing what they're doing, and then you get to read in the market, then implement and execute what then you want to do to take advantage. You got to remember, what makes you so special to think you're going to buy something at 3 and other people are going to wait after you and buy it worse, buy it 4, buy it 5, buy it 6, so that you could get a 4 or 5 tick winner. What makes you so special? Well, what makes you so special is that they're buying it at 4, 5, 6, and 7 after you're already long because they're puking a short. They're getting out of a short position. So they're paying a higher price after you because you got it before they started chasing it. Part of the crowded sequence. The other thing is shakeouts. A lot of people take getting stopped out personal. And I'm not saying you shouldn't be mad when you have a losing trade. The other metaphor and story is a boat. If you think of a boat, if there's too many people on a boat and it starts to sink, and someone says, hey, wait a second, if we throw 100 or if we throw 20 people off this boat, we'll float. Guess what? They're going to throw 25 people off, right? The excitement, they're going to go and overdo itself. Why? Because people want to survive. That's what the market has to do. It has to survive. So it's shaking longs and shorts out all the time. Don't take it personal. If you're long and it won't go, it's because you're long with too many other people. That's it. It's not you against the market. It becomes, when you think of it that way, you get angry, frustrated, and then you start doing things that aren't even part of your strategy. And your mind starts putting you on a leash and walking you around. You've got to look at it as shakeouts are part of the market. You're either part of it or you're playing the other side of it. Let the other weak hands get shook out and then get long. That's part of the strategy I explained a little bit generally speaking earlier, where when a market transitions back up, they shook out a lot of what? They shook out a lot of longs already when they moved down. All the longs puked it, made it go lower. So if I can find a transition back up, the shakeout has already occurred of the weak longs. You know what I mean? So that's how it fits. That's why it would work. If you don't know why your strategy is going to work, you're never going to trade it. If it doesn't make clear back of the hand sense of why it would work, you'll never trade it. If you feel lucky when you have winning trades, you won't maintain it because it probably is just luck. You have to have, right, you have to be confident that it's a probability game and not a game of, well, the ball landed on black, I won on roulette. It can't be that incidental or that that kind of luck because you won't be able to maintain or be consistent and you blow up.
Yeah, that's incredibly powerful. So you have been so gracious with your time with us here today, Anthony. I have one last question for you. So if someone was new to investing and trading, what tips would you share with them on getting started?
I don't want to get and be salesy about the product I have at all because I'm not that kind of guy. And you know that even when you talk to me, you probably didn't even know I had something I offered. So people don't have to do what I have, the product I have, but they need to do something similar to it. So I'll put it to you that way. If I always look at that question you just posed to me as, let's say it was my son who wanted to do it or my nephew or someone in my family, how would I go about trying to train them? I would make sure that they were part of a group that introduced people to each other, and not necessarily in a Skype or in a chat room where you're typing, but actually communicate like humans by talking and listening. Recreate a prop environment. I did that with this Edge program that I have that not only gives you the training with all the videos, and there's like 6 tracks, but the last track gives you lifetime access to everybody else who's invested in the course. So you could talk and listen to as if you're sitting next to these guys and girls and in a virtual office. It's been the most powerful thing I've created because not only has success come out of it from the people in there, but lifelong relationships have come out of it. These guys all vacation together, and they know each other's families because of that room. And that becomes really powerful because they all had to go through the program in order to have access to that room. So it's not just anyone, oh, okay, I'll get in that room, I'll pay for this room, or that, because you don't want too many knuckleheads in a room like that. But they're filtered by going and investing in something that's not too expensive, but it's not cheap, because we want to filter out people who are pretenders from those that are serious about it. And then once you go through some of the training, it becomes easier. I'm not saying trading is easy, but it's easier than most people make it because they try to do it on their own. They try to buy an indicator, and it's not their fault. You don't know what you don't know, and I'd like to have a green arrow, red arrow system too. It just, all that stuff is lagging. People realize that, And they
Yeah.
finally come to that realization where I got to educate myself. The problem with that is you do an internet search, right? You go on Google and you get inundated with all these experts and all these gurus. So the tip I would give people is you want to make sure that you could disqualify a lot of the garbage out there and qualify the good stuff, because it's like any industry. There's a lot of bad insurance salesmen, a lot of bad car salesmen, lawyers, doctors. There's bad in everything. Trading education is no different. But that doesn't mean you don't need it. What I tell people is, and I had a guy talk to me on the phone, knew nothing about this program. He says, I want to do it. I said, well, go check the website. I don't want to sell you something you don't know about. He said, I know it's good. I said, how do you know it's good? He says, because if it stunk or if it was mediocre, you wouldn't want to meet every week with us, because I meet with this group every Tuesday in a live and recorded session. And he says, you certainly wouldn't want to introduce me to other people who bought it. And that's what I do in the live virtual office. Right. So it's like that dawned on me, like, well, I knew it didn't stink, but now this guy knew it just based on the commitment that people have. So while you don't have to do that specifically, you got to do something that puts you around other serious people. I'm not going to get into details of like a tip of how to train yourself, but the very basic things nobody covers when they're training themselves, but it's imperative that you know them. And they're not basic, but they're basic to people who've done it the right way. Meaning, if you can't follow a market, how could you trade it? Well, you have to quote it. What do you mean quote it? And I show you how to do it. It's a very simple exercise. How about mastering your dome? If you're trading my money, Grant, so you ask me what tip would I give someone starting out? You got to create like an invisible boss. Because most people trading are trading their own money. They're their own boss. That's often not good. You need someone to criticize what you do, to make sure that you're working hard and have some accountability. So if you're trading my money, let's say, Grant, and you got a particular platform that you're trading on, you could be damn certain that I'm going to test you, not on your results, because that comes later. I'm going to make sure you know how to buy it, sell it, get out, buy 3, sell 2, know if you're long or short. I'm going to make sure you go through these exercises while I'm over your shoulder. It has nothing to do with making money. In fact, you'll lose money. It'll be a demo. That's how I would do a demo. I'd make you buy 5 contracts and sell 3 at the market. Now you're long or you're short. Where do I got to get out? Do I look for a bid or offer? That's confusing, but if it shouldn't be once you're doing on your dome. I would want to watch you, in other words, take that platform and tear it apart, getting in and out of positions based on my instructions. Now you and I know that you're a master at this price ladder. There are going to be no mistakes putting in orders. And furthermore, you're going to learn a lot about market behavior just by practicing that simple exercise. But I guarantee you that 80% of people who are trading live money are not experts at just the functionality of their dome clicking in and out. And if I tested them, 80% of the people would fail. And that's fine. They're trading their own money. I don't care. But if you're trading my money, you would pass that test of being an expert of your dome before you put one dime of risk in the market. So they're small but powerful steps that nobody takes. They just want the $10,000 days or the $50,000 months and work 3 hours and be done. And that's fine. That could happen. But you got to start the right way, and most people don't. Serious people stay on track, and I would say 99% of the people who come through me are very successful, at least at other things that they've done in life. So they're very serious people. Is everybody that comes through me or education going to be successful? Of course not. There's no guarantees, and I don't make them. I just tell people, give yourself the best chance to do this, which means find a community that's well-rounded, not misery loves company, not people that are bashing other people because they want to. If they can't do it, nobody should do it. Get out of your own way and just get around good people, and you will collaborate like crazy, and you'll be off and running. Save yourself a lot of time and money.
Yeah, those are some powerful techniques and principles, Anthony. I really appreciate you going over those today, emphasizing the power of community and having the right people around you, as well as the whole market correlations and inverse correlations. Anthony, thanks so much for your time today. Hopefully we get to talk with you again in the future. That's a pre-framing question. Hope that's a yes. We'll get to interview you again.
Absolutely. Absolutely.
Thank you again for your time and for joining. This is Grant Larson, and until next time, trade safe. Oh, and one more thing. I forgot to mention. Hey, tomorrow, July 8th at 12 p.m. Pacific time, I'm going to be running a web class. It's going to be discussing some of the techniques that Anthony and I just talked about, how to use correlated markets and things like that in making our trading decisions. All right, thanks for joining, and I look forward to seeing you there. You can register by going to financialinvestingsecrets.com. Again, this is Grant, and trade safe.
Thank you for joining Grant on Financial Investing Radio. Remember to subscribe and leave feedback. Don't forget to download your free high probability indicators before your next trade. Visit financialinvestingradio.com now.